ask if you understand. Just respond so that I know that you guys are following, please. Now, I started from this zone. I said when market makers are coming from premium, they target sell stops. And where is the sell stop on the monthly? Is this low right here. When they attack sell stops, they make a rejection because they've cleared all the others, stop losses that are resting below that zone. When they attack sell stops, they take all the others and stop losses resting below this zone. They make a rejection block. Right now, where did the move start from? The move started from this zone. This candle was the candle that facilitated the break of this low. This was our first break of structure. This candle facilitated the break of this low. This candle facilitates the break of this low. Where is the candle on the monthly scale? It is this monthly sponsored candle. This monthly what? Sponsored candle. Facilitate the break of this structure. And before they did that, we see them run through the buy stops. We see them run through the buy stops. We see them run through the buy stops. Oh God. Thank you. I'm not sure I will use this laptop for too long. It's frustrating me. If I'm pushing, it's pushing to another direction. They attack the buy stops, then they break structure. This was the first place they broke structure. This is not a major structure. This is just what? An internal range structure. But the fact that we have a sort of momentum that took out this low made me focus my eyes on this zone because they have their eyes fixed here, where the origin movement started from. Even if they will rate this high, they will respond to this zone first and come back and rate this high, buy stop, complete a market maker buy model. Now, they started moving all the way down. Where was their target? They started coming back to this low. They finished this low, took out all the others resting below this low. Took out all the others resting below this low. When they did that, they started moving price upward, make a rejection block, and we had our first monthly change in character, in as much as this zone was taken out. First monthly change in character because this is a structural point. This is a structural point. We had our first break of structure in this area. Price broke this low, right? And we see price started retracing back. Now we had the rejection block right here. After we had the rejection block, price started pushing upward, making this low our major low. Here's our major low. This low becomes our major low. Why is it my range low on the monthly? Because this low took out liquidity. What did I say? This low took out liquidity. That is why it's my major low on the monthly. It took out liquidity and had our first break of structure. This structural high was taken out. Now, what is their next point? After a structure is taken out, they return back and mitigate this rejection block. They return back and mitigate what? This rejection block. They return back and mitigate this rejection block. Then when you're seeing price coming down like this, you know this is a corrective move. How do you know it's a corrective move? We can see momentum as to effort. What did I say? Momentum as to what? Effort. If it took price over 6 candles to create this, if it took price 15 candles to create this high, to buy up all the way to this high, it's taking price over 50 candles to get back to this low. Now, let's see how many candles created that high. Let's see how many candles created that high. From this point, let's measure the candles. We have 13 candles. 13 candles to create this high, right? Be 12 candles. 12 candles created that high. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, no, 13, 14, 14 candles. Because this is the high right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candles. 13 candles created that high. Candles. Now let's see from that high how many candles came back for the retracement, right? We start from this candle. You see the candle that mitigates. We have over 26 candles that created the retracements. So we have effort as to what? Effort as to momentum. Effort as to what? Effort as to momentum. So price came back down just to mitigate this rejection block. Now let's go back to what we're doing. This low was the last low that was created because this was the low that took out liquidity. So on the monthly, that becomes my dealing range low. On the monthly, that becomes my what? Dealing range low. On the monthly, that becomes my what? Dealing range low. Your dealing range is really important. Why? You need to see where price created the first low and where price is reaching for the next high. So I'm going to put it DRL. I'm going to put it DRL, dealing range what? Low. DRL, dealing range low. Now, where is my dealing range high on the monthly? I have my dealing range high above right here. This was the high that took out liquidity. Is my voice still okay, guys?
Yes, it's okay.
All right. It's okay now.
I'm going to call it DROH. What is DROH? Dealing range high. Dealing range high. So I'm going to call it DROL, dealing range low, DROH, dealing range high. So this high to this low is the range I am working with on the monthly, not overall. Guys, take note, on the what? Monthly. How do you mark your dealing range? Your dealing range high must have taken liquidity and your dealing range low must have taken liquidity. A low that took out liquidity and a high that took out liquidity, they are strong zones. What did I say? A low that took out liquidity and a high that took out liquidity, they are what? Strong zones.
Very, very strong zones there.
Because those areas are vital to market maker. They are vital to market what? Makers. They will always want to go back to that zone because that area is where they have educated people's stop loss. So if you are buying or selling, you should be knowing that your zone should be in anything resting above that high is external range liquidity. Anything resting below this low is external range liquidity. And you remember, where do they target? They always target external range liquidity. If they are doing anything in this zone, their target is external range liquidity. If they are coming up from this zone, their target is external range liquidity. Guys, I'm communicating, right? Beautiful. Now, if you look at this, what is my Fibonacci? I use my Fibonacci to know where price market, where they priced their pricing to. Fibonacci will tell you if their pricing is premium enough or discount enough. We can see that right now they are in premium markets because they move all the way to this 79% in between the 89% and 79%, then they sold off. They sold off. Why I'm not using this place as my range high? This is liquidity on the monthly. It's internal range liquidity. What did I say? Internal range liquidity. On the monthly is called internal range liquidity. On the monthly is called what? Internal range liquidity. Internal range liquidity is found inside your range. So now we are going to move from the down all the way up. We're going to move from the way down all the way up. When we create this low, we've established this high. We establish this higher low, this higher low. When we create this low, we establish this high. This high create this higher low. This higher low push the way to this higher high. Are you following? Push the way to this what? Higher high. And price returned back to mitigate what? This what? Rejection block. Now, when price came back to mitigate rejection block, they swept these people that are buying here. They swept these people that are buying here that placed their stop losses there already. They were taken out in their stops. They were taken out in their what? Stops. Thus making this place an intermediate short-term low. What is an intermediate short-term low? I think I explained it already. An intermediate short-term low is a low in between two lows. An intermediate short-term low is a low between two what? Lows. So when this low was taken out, this became an intermediate short-term low. All right. When this, can you guys hear me?
Yes.
Yes. Yes, yes, yes.
Clear, right?
Loud and clear.
Okay, good. When this low was taken out, this become an intermediate short-term low. This became our higher what? Low. This is the low now pushing price up, but this does not make this low the major low. This still remains the major low. I don't know, this MFF, their server can be so useless. I need to download their laptop. So that I upgraded my laptop, deleted everything. Yeah, MT5 is just nonsense. It can hang for like 20 minutes and you will not see anything. So now price came down and took out this low. We have this as our higher low. This higher low now created this high. This higher low now created this high, intermediate short-term high. Why is this an intermediate short-term high? Because this high did not break this high. So we have this intermediate short-term high creating this new what? Higher low. And we have this is our higher low, right? This is an intermediate short-term high. This high is between this high and this high. We have a new higher low again. Price is still fractally moving up. A higher high, a higher low, 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 a higher high, a higher low. Then we see price retracing down. There's no new higher high. We now have this low taking out this low. We see an intermediate short-term high, an intermediate short. This low was taken out. Then this higher low now created this low, this high. Because still a new high was still not broken. Now this high created this low, called making that an intermediate short-term low. What is an intermediate short-term low? I said a low found in between two lows. A low found in between what? Two lows. A low found in between two lows. This low is found in between this low and this low. So this becomes an intermediate short-term low. Then we see this low taking out this low. So we have that low as our higher low. Now this low has engineered this high. Remember this high right here failed to break this high, but we still have it as a higher high because it's higher than this high right here. Now that we have a higher low on the monthly scale, right, guys? We have a higher low on the monthly scale. Where will be the next step to take out this high to form a higher high? So whatever price is doing, price will continue to push up until this high right here is taken out. This relative equal highs we have right here. Until they are taken out, price will continue to push up. Until they are taken out, price will continue to push up. So selling on this range, in as much as USD card is at extreme premium, selling over there is risky. Why? Price goes for just one major thing, liquidity. Price go for just one major thing, liquidity. Price go for just one major thing, liquidity. And if price is trailing this liquidity, anything that is above it will be crushed. Anything that is above it will be what? Crushed. So you cannot be looking for sales around in USD. In as much as it's on premium, you can't sell it. It's at a very critical zone. You can only wait for price to give you a retracement into a bullish zone, then you buy all the way up, because we know that price will continue to push to this zone. So now that we've created a higher low, we are going for a higher high. Where is a higher high? Above this high. And where are we targeting? This imbalance right here, where we have this imbalance right here. That's where price is targeting. So guys, if you don't understand, you can let me know before we push further. You understand, guys?
Yes, I understand.
Yes, I understand.
Yes, I
Price will
understand.
not do any meaningful thing till price fill up this imbalance. That's where price is targeting. And the market makers are not interested in anything, but they are coming after this high. Why are they coming after this high? Those people that some of them are, long-term traders, institution, corporate firms that are selling from this zone, that took out those people that were buying here. They are coming for this high. So anything that USD card is doing, she's pushing to that high. Anything that USD card is doing, she's pushing to that high. Please, if you have questions, feel free to ask me now. Feel free to ask me your question, guys. If I go to the weekly, no question. All right, we'll go to the weekly. Now, when you see the weekly is more structural than the monthly. Why did I say the weekly is more structural than the monthly? You can see some structures in terms of internal range structures on the weekly. You can see some structures in terms of what internal weekly that is showing. Now, all of these structures that are showing on the weekly are internal range liquidity. Now, on the weekly, we can still see that this range is a weekly range liquidity. That's where price is trailing to. Is a weekly range liquidity. That's where price is trailing to. The best bet price can give you right now is to join in the buys at this zone. Why did I choose that zone? This is the zone that caused the last expansion we had on the weekly scale. The best bet price can give you now is to join in the buys on this zone. Why? This is the zone that caused the last expansion we had. So price can retrace back into that zone, giving foreign currency, because this is SSS. That's if the dollar is ready to retrace. Because for me, I actually want to see the dollar retrace back a bit to what a discount price. I think the dollar is really premium. It needs to retrace into a discount price and continue moving upward. So on the weekly, you know that we are still coming after this liquidity. What are we looking for? a market maker sell buy model to be completed. Look at it right here. A market maker buy model to be what? Completed. A market maker buy model to be completed. Why are they going to target market maker buy model? They already took out the cells right here, the cell stops. Can you see that, guys?
Yes, I can see that.
They took out cell stop right here. So it looks very small, but they took out cell stop. A market maker cell model was completed, right? Now, when they take cell stop, where's their next target? They'll go for buy stops. They'll go for what? Buy stops. And that's why they're targeting. They're targeting these buy stops. And for them to give you an opportunity to join in, is that this zone I'll look to join in. If they don't give, then I don't have it. It's a trade. USD card is fragile. You cannot buy right now, except they give you a discount pricing. At the same time, you cannot sell it right now. It's risky. They might decide to just continue going up all the way and not give you an opportunity to join in. So in a bullish trend, that brings me to the next topic. Do not look for what sells in a bullish trend. Look for buys. That means they're looking for only bullish order blocks. What did I say? In a bullish trend, do not look for what sells. Look for buys, because in a bullish trend, supply is being taken out. You cannot be looking for buys when supply sells when supply is being taken out. You cannot be looking for sales when supply is being taken. What are supply? Bearish order blocks, bearish fair value gap, bearish mitigation blocks, the bearish breakers. All of those are bearish PD arrays. All of those are what? Bearish PD arrays. So you cannot be looking to what? Sell in a bullish trend. You cannot be looking to what? Sell in a bullish what? Trend. Because bullish PD arrays are taking out bearish PD arrays. Supply zone is being taken out. Look at supply zones. All of these are supply zones. They are being taken out by demand. So looking to sell when supply zones are taken out is like putting yourself in a hot leash. That's why I see GBP USD, Euro USD, they can just drop instantly from any zone. Am I communicating, guys? We know now that USD card is coming after this. Where is the best place for them to retrace and give us an entry writing? Maybe they can do that next week. Who knows? Maybe when the new month starts, they open low and they close high. When the new month starts, they open low and they close what? High. They open low and they close high. So they might give the monthly opening right down here. They might give their monthly opening right down here before they continue to go premium. So if they don't give you an opportunity to join in the buy, then you have to wait until the sponsor candle above is mitigated, until price gets to premium before you can look for what sells. So in a bullish market structure, do not look for what sells. In a bullish market structure, do not look for sales. In a bullish market structure, do not look for sales. Look for only bullish what? Trades. So that you can join in the trend. You know, they said the trend is a a range structure. That's a range structure. Now, range structure is a way whereby market makers engineer liquidity both on the buy side and on the sell side. They engineer liquidity on the buy side and on the sell side. They trap both buyers, they trap both sellers. Range structure is a place whereby market makers engineer liquidity both on the buy side and on the sell side. They trap both buyers and sellers. Now, in a range structure, we have a premium and we have a discount. Price can move in that range structure for over 1 year, 2 years, 3 years. Price can move in a range structure for over 1 year, 2 years, 3 years, even 5 years. Price can move in a range structure for even as far as 15 years. Right? Price can move in a range structure even as far as what? 15 years. Range structure, price is not going back to mitigate the immediate candle that caused the break of structure, the sponsor candle. This is the sponsor candle. Price will not go back instantly to mitigate that candle. What will price be doing? Price will just be mitigating the immediate candles that caused the break of structure, continuing in that trend, thereby engineering liquidity both on the buy and the sell side. Thereby engineering liquidity both on the buy and the sell side. So price is engineering liquidity on the buy side and the sell side. Usually range structure can hit that structure 4 times before they break out. 4 times for the breakout. If you look at it, they hit the resistance once, they move back to the discount. 1, they hit the resistance twice, they move back again twice, they hit the resistance. So a range structure can hit that zone 4 times or 3 times before they finally what? Break out. This is 1. This is 1. This is 2. This is 2. They move up again to premium 3. They move up again to premium 3. They move up 4. They move up 4. Then they break out. After running by side, they came back, mitigate this zone, and they break out. Now, when they break out, the last time they had a breakout, was around this area. But I don't do breakout strategy. All we need to look for, this is the other block that caused the expansion. This is the other block that caused the expansion. And that is the zone I said I would prefer price to drive into. Then I'll be looking for what? Buys all the way up. I'll look for buys from this zone all the way up. You can target the 50% of this 3-day order block because it's a 3-day order block. And a 3-day order block is big. So you can target the 50%. Now let's go to the daily. If you look at the daily, this pair is rejecting from the daily. This pair is rejecting from the daily. Where is it rejecting from? This daily hidden base. Guys, I'm still trying to get used to this new operating system. It's actually horrible for me. It's disgusting because I don't see any reason why I'll have to tap 2 times for me to be able to select an object. I have to tap twice or else it will be roaming around the screen. Now, ICT will mark the whole of those bearish candle, all of those bearish candle from this zone. That's how we have them all as a 3-day order block. All of this is the bullish order block. Or refinement will give you this. All of this is the bullish order block, but refinement will give you this. Now, because we had our last area whereby price took out of this range structure, we had our last area whereby price left this range structure. This is the last zone where we have price leaving the range structure. Right? Where is the other block that facilitates that break, where we have this break out of the range? It is this zone. This zone facilitates the break of this area. Got it? After my class, there should be something I'll be able to do to stop this mouse from malfunctioning like this. I need to check the settings. So if you look at this on the daily, is already rejecting from this daily hidden base. USD card is rejecting from this daily hidden base. Now we see that price has been pushing so much. We already have a massive break of structure above this side. It is fair enough for price to reverse back and come to this zone where we have the breakout, then retest this area. It is very, very fair enough. But because the dollar is so bullish, it's finding it difficult for SSS, USD SSS to what? Return back to their origin. It's been difficult for them to return back there. You can see prices rejecting from this 12-hour zone. That hidden base, what's the hidden base? A hidden base is a zone whereby you have an order block right there, but you are not seeing it physically. Except you have a highs that can see that there is an order block right inside that zone. So this is a hidden base. On the 12th hour, this is a hidden base. Look at it, guys. Let me show you how you understand a hidden base. On the daily, it's a hidden base. You see this wick trading above this candle. Then you see this zone right here where you have the 2 body candle meeting each other. Then you have this rejection block meeting this other candle. That's a hidden base. And inside the hidden base, there is always an order block. That's why you can see this order block right here. Inside the hidden base, there's always a what? An order block. Now, on the 12th hour, we can see that price is shifting, while a daily failed to take out a previous day high. Look at it. Instead, it respected and mitigated the previous day high. So USD card should be massively selling. It's selling. Now we are having a failed swing. Now let's go to the 9 hours. We are rejecting from a 9-hour order block. Remember, institutional order flow for this pair is still very much bullish. The market maker can decide to say, okay, they don't want to go any more down. They just want to stop halfway and continue bullish. They do it all the time. That's the more reason why I don't really like to make counter trend for new student. You can see price is retracing from this 9-hour order block. It's really, really clean. And it left from the 50% exactly. Now, why did I say that it's shifting on the daily? A daily zone, it's failing to break a previous day high. Thus, it mitigated the previous day high. Price mitigated the what? A previous day high. When price mitigates a previous day high, fail to break it or fail to eradicate liquidity. And we are having a shift already. See now. just feel like crying right now with the way my laptop is. This new operating system is just, I can't push my screen and I have to tap it after pushing it. I don't know if that's, this laptop was not like that before. When you push the screen, I have to tap it or else it will not, it will continue to move. God. Let me just breathe and be taken care of. Now, this demand area, we have a shift in market structure. A shift in market structure. Why? This demand zone was taken out. And not just that, we saw how this high was also, we see this top hunt right here. Now we know that overall we are bullish, we are going up to that monthly imbalance. But for now, we